Here again with Smart System. In our last lesson, we learned about the bullish and bearish engulfing candlestick patterns. In today's lesson, we're going to look at two more reversal patterns, which are known as the hammer and the hanging man candlestick patterns. So let's get started. So like the spinning top and doji, which we've studied in previous lessons, the hammer candlestick pattern is made up of one candle. The candle looks like a hammer, as you can see here, as it has a long lower wick and a short body at the top of the candlestick, with little or no upper wick. In order for the candle to be considered a valid hammer, most traders will say that the lower wick must be at least 2 times greater than the size of the body portion of the candle, and the body of the candle must be at the upper end of the trading range. When you see the hammer form in a downtrend, this is a sign of a potential reversal in the market, as the long lower wick represents a period of trading where the sellers were initially in control, but the buyers were able to reverse that control and drive prices back up to close near the high for the day and the short body at the top of the candlestick there. After seeing the pattern form in the market, most traders will wait for the next period to open higher than the close of the previous to confirm that buyers are actually in control of the market. And that's pretty much true with any pattern. That's one candlestick most traders gonna wait for, confirmation on the next period of trading, before taking any action as a result of the pattern. Two additional things that traders are gonna look for on this one is like some of the other patterns we've looked at. A long lower wick is going to increase the significance of a pattern, as well as an increasing volume on the period that forms the candle is also going to increase the significance of this pattern. So let's look at the chart here. You got a chart of research in motion here, and we see we have a downtrend in the market, and then we have the hammer, which we can see formed here, and then we have increase in volume. On the day that formed the hammer, we have the next candle, which opens higher than the close of the candle that formed the hammer, and then we do have a rally that comes after that. In the specific example, the hanging man is basically the same thing as the hammer, but instead of being found in a downtrend, it's found in an uptrend. Like the hammer pattern, the hanging man has a small body near the top of the trading range, little or no upper wick and a lower wick that is at least 2 times as big as the body of the candle. Unlike the hammer, however, the selling pressure that forms the lower wick of the candle, and then the candle closing in the upper end of its range, is indicative, more so, of a sign of a potential reversal to the downside, because the selling pressure is not anticipated in the uptrend. So where the hammer, the selling pressure that forms the lower wick, it's kind of expected because you're in a downtrend. Here the selling pressure is not expected, which forms the lower wick of the hanging man. So that's a warning sign that there is selling pressure in the market, especially if you're in an overbought condition. You know those types of things. You may start looking for a reversal there. As with the hammer, and as we said with most one candle patterns, most traders are gonna wait for confirmation that selling pressure has in fact taken hold by watching for a lower open on the next candle, and traders are gonna place additional significance on the pattern when there's an increase in volume during the period that the hanging man forms, as well as when there's a longer wick. Let's take a look at an example of a chart. We've got the uptrend, and then we have overbought conditions. You can see the market ran up there pretty significantly. We have the hanging man there. We don't have an increase in volume on this one, but we do have the lower open on the next candle and increase in volume, driving that candle down lower really significantly. So a pretty decent reversal pattern and play there, and obviously hindsight's 2020 on this one. We may have missed out on that one had we been trading at live, but you can see a good example of a situation where the hanging man formed there. So that's our lesson for today. As always, if you have any questions or comments, you can leave them in the comment section. Have a great day.